Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So 2021, what a year. Ended up with the second most new all-time highs by the S&P 500 in history. Let's also talk about valuations. Real earnings yield reached a historic low in the fourth quarter. And finally, equity market risk was somewhat calm coming into the year, but bond market risk perhaps foreshadowed some of the volatility that we've experienced here to start the year of 2022. Let's talk a little bit about that as well. So as I said, 70 new all-time highs by the S&P 500 in 2021. If you look back throughout history since 1928, that comes in second place to 1995, sort of the heart of that technology bull market that, of course, ended with the tech bubble several years later, with 77 new all-time highs. When you take this into consideration that we also only had a max drawdown of just over 5% during the year, only one time, in fact, 5% pullback, this type of momentum and that lack of volatility, 2021 is going to stand out as one of those uncommon positive years for stock market investors, but don't take it for granted because these types of years don't come along too often. Now, in terms of valuations, earnings yields have been somewhat low for quite some time, but when you look at real earnings yield, that's the earnings yield of the S&P 500 minus the CPI year-over-year growth rate, so the rate of inflation, the increase in the cost of goods and services. Everyone knows the stats about inflation if you watch the news. The CPI and the PCE reached the highest level since the early 1980s. We know that, and of course, that's a big contributor to compound this low earnings yield that we see, which has resulted in high valuations and pretty low levels. In fact, the lowest level in history in terms of real earnings yield. Some potentially positive news on the inflation front. If you look at new orders and inventories continue to build. I think perhaps we're seeing some early signs that the supply chain issues are starting to improve, and also consumer demand that we saw in 2021. I don't necessarily think we're going to see that again in 2022 when you look at the fact that personal savings have largely been spent. The record amount that was saved after that abnormal amount of income from the federally direct payments and extra unemployment benefits in 2021, income savings greater, demand greater. I don't think we're going to see inflation persist at the same level by the end of 2022 next year. And finally, equity market risk heading into the year was somewhat calm, relatively speaking. Bond market risk has been slowly climbing for the past 6 to 9 months. And if you look back in the fourth quarter, in December, it reached its highest level since the recession back in March 2020, during obviously the heart of the pandemic and the heart of the economic shutdown. Obviously, that's not the case right now, but the bond market was indicating that perhaps there was some risk in the market. We've already seen some spikes in yields to start the year and some volatility, especially in those growth areas of the market that are being discounted back at lower multiples due to that rate volatility. So something to keep in mind, the bond market risk slightly elevated as we start the year. And finally, a little bit of a thank you to an 11-year-old from Oklahoma, Davion, from Oklahoma, being honored for his heroism by saving a heck of a day here on December 9th. He performed the Heimlich maneuver to a classmate and helped her get a water bottle cap out of her throat. And then later on the evening, he didn't just rest. He apparently walked by an elderly woman who was walking out of a building that had a fire and went up and assisted her to help potentially save her life. So really impressive day. Congratulations and thank you very much for the help, young man. I think that's an inspiration for all of us, and we need some good stories as we start the year. So I want to thank everyone for watching, and I'll see you next time.